Trump has accumulated over $100 million worth of bonds since January, and that's no conspiracy. But you do have to question why his heavy insistence on lowering rates. Let's get into why these moves are important. So, since January, Trump has accumulated over $100 million worth of corporate and municipal bonds where if rates do come down, bond prices will go up, making Donald a very, very wealthy man. Now, this is not illegal, very questionable, but not illegal. But it does give some reason as to why he has this heavy insistence on lowering rates when it's really not going to be to the benefit of the American people. Now, the other aspect is we do have to take a look at the Fed minutes and what's going on at the Fed, including Jackson Hole this week. So the Fed minutes clearly show that inflation is expected to come up, and that makes the Fed very cautious. With only 2 dissenters for September's rate cut, there is still a lot of pressure, obviously, from the Trump administration to cut these rates. But the consensus for now is that we're still expected to do so, but we're only going to see a 1/4 point, and that's only a 70% chance, down from its very high 90 rate. Now, if we take a look at Jackson Hole, what can we expect? Well, Powell's speech is this week, and it could tip markets. If he shifts, yields could slump and bonds might rally further. Now, overall, the markets today were very much into the red, but I anticipate that that's only as a bit of a defensive position for what we might expect from Powell tomorrow. Now, the bottom line, Trump is stacking bonds as a bet to lower rates, or a bet on lower rates. Now, if you're long bonds, cool. You have to be planning and listening to what Powell has to say, as if your portfolio depends on it, because it probably does. Now, what do you think? Do you think that Jackson Hole might trigger some relief, or do you think that there is a different plan for the markets? Drop your take down below. Love to hear what you have to think.